Today we need to talk about Beyond Meat stock, because the volatility we are seeing right now is something we haven't witnessed in a long time. On Tuesday, BYND raced as high as $1.40 per share before pulling back to around $1.28 just after 1:30 in the afternoon in New York. That's a swing of nearly 20% in the same session. And what's even more interesting is that this comes just one day after BYND surged more than 16% during a market-wide sell-off. Now, less than 24 hours later, the stock is showing signs of another momentum burst. The big question today is very simple. Is this the continuation of a short squeeze cycle, or is there something else going on behind the scenes? In this update, we're going to break down the price action, explore what is driving the renewed surge in volatility, and explain whether any actual fundamental catalyst is pushing the stock higher. Spoiler alert, the evidence strongly suggests that this is once again a trading-driven, short interest-fueled spike rather than a genuine comeback story. But as with all periods of extreme volatility, the details matter. So, let's get into what is really happening. Let's start with the numbers. At the time of recording, BYND has already traded more than 170 million shares today. That is a massive volume figure for a company with a market cap this small. This kind of turnover is typical of heavily shorted micro-cap or small-cap stocks in the middle of a speculative rally. And when you look at the pattern of the move, the story becomes even clearer. We saw a sharp push higher in the morning session, followed by a fast retreat, and then another attempt to climb. These are classic signs of momentum traders, short covering cycles, and algorithmic trading systems that are reacting to volatility spikes rather than fundamentals. This brings us to the core of what is actually driving BYND today. The stock has become a battleground for short sellers and opportunistic retail traders. Beyond Meat is a company that has been struggling for years. The demand for plant-based meat has stagnated. Sales have declined year over year. Margins remain thin. And most importantly, the company continues to post sizable losses. In its most recent financial report, Beyond Meat recorded a net loss of over $110 million for the quarter. There is no disguising how difficult the operating environment has become. But while the fundamentals remain weak, the stock continues to attract massive retail attention. This is the part people often overlook. Stocks do not move only on fundamentals. They move on supply and demand, on positioning, and on sentiment. And right now, BYND is a perfect storm. It has high short interest. It has low price per share accessibility. It has brand recognition. It has volatility. And it has a recent history of meme stock-style squeezes. When you combine all of those ingredients, you get exactly what we're seeing today, explosive intraday swings driven almost entirely by trader behavior. One major factor to highlight is short interest. While the exact percentage fluctuates, BYND consistently appears on lists of high short interest small cap names. Shorts target companies like Beyond Meat because the fundamentals are predictable, losses are consistent, demand is weakening, and there is limited visibility for a near-term turnaround. These conditions make it easy for short sellers to justify their positioning. But that also makes the stock extremely vulnerable to squeezes. It becomes a coiled spring. Any spark, even a small one, can set off a wave of short covering. Monday provided that spark. BYND jumped more than 16% even though major indices were down significantly. That kind of divergence creates a spotlight effect. A stock that acts independently of the market becomes instantly more interesting to traders. And when retail traders notice something moving while everything else is red, they flock to it. That sudden flood of attention then becomes the catalyst for the next wave of speculation. And that's exactly what carried into today's session. The rally we're seeing today is not a reflection of new information. There has been no press release, no earnings update, no distribution deal, no regulatory filing, no analyst upgrade, nothing that would justify a fundamental re-rating of the stock. Instead, what we're seeing is the continuation of a sentiment-driven squeeze. The stock rose sharply, shorts panicked and covered, volume spiked, retail traders jumped in, and the cycle repeated. What makes today's move slightly different from Monday's is the amplitude of the intraday swings. On Monday, the stock climbed steadily through the session. Today, we're seeing violent moves up and down. This often happens after the first day of a squeeze, because on day two, the tug-of-war between long-side momentum and short-side re-entry becomes more intense. Shorts who exited yesterday may be attempting to rebuild positions today, while momentum traders are looking for continuation. That creates a highly unstable environment where price action is driven by competing forces rather than clear direction. Let's talk about volume again, because it is crucial. When volume explodes in a small cap stock with high short interest, the probability of a sustained squeeze increases. The volume today is massive. But it is not the volume of long-term investors loading up. It is the volume of fast money, day traders, algorithmic systems, short-term speculators, and forced short covering. This is what makes the move risky to chase. When the music stops, volume collapses quickly, and the stock can drop sharply. It's important to be explicit about what has not changed. Beyond Meat's business challenges remain significant. Demand for plant-based meat is falling, not rising. Price-sensitive consumers are shifting back to conventional meat products. Competitors are undercutting Beyond Meat on price. And the plant-based category in general has failed to maintain the growth trajectory many investors predicted several years ago. None of that has shifted in the past 24 hours. In addition, Beyond Meat recently engaged in a debt-for-equity swap to strengthen its balance sheet. While this move helped reduce financial pressure, it also diluted shareholders. That is not typically a bullish signal. It is a survival mechanism. And while the market can sometimes overlook these realities during a squeeze, the fundamentals will matter again once the speculative energy fades. So what we're seeing today is not a comeback story. It is not the beginning of a long-term uptrend. And it is not a sign of renewed consumer demand. What we're seeing is a pure trading event. A short squeeze. A momentum cycle. A wave of speculative interest. The kind of event that can produce sharp gains, but also sharp losses if the crowd reverses. With that said, there are still important takeaways for traders and investors alike. For traders, BYND offers volatility, liquidity, and clear psychological levels. For investors, it offers a reminder that price action can be misleading during periods of speculation. Knowing the difference between a fundamental shift and a squeeze is crucial. Looking ahead, the key to watch will be follow-through. If volume remains elevated and the stock continues to hold above key support levels, the squeeze could extend into another session. But if volume collapses and the price stalls, the stock could retrace quickly. This is why timing matters so much in trades like these. The opportunity can be real, but the risks are just as real. As of now, the most accurate conclusion is that Beyond Meat is experiencing a second wave of short squeeze momentum. Nothing more, nothing less. There is no hidden catalyst. There is no unexpected turnaround. There is no change in consumer demand. This is a sentiment event. And while these events can be exciting, they do not change the underlying reality that Beyond Meat remains a highly speculative stock with significant operational challenges ahead. For now, the smart approach is to view this move with measured interest and clear perspective. Recognize it for what it is. Respect the volatility. Understand the psychology driving it. And always remember that short squeeze rallies can disappear as quickly as they appear. BYND is not having a comeback. It is having a moment. And moments can be powerful, but they are rarely permanent. We'll see how the rest of the week unfolds, but one thing is certain, Beyond Meat is back on the radar, and traders are watching every tick.